Everybody, Brian here from quantlabs.net. Okay, so today I want to show you a new report I've been working on. I call this the big ass report because it pretty well has everything I've been working on for the last couple of weeks and prior to that as well, all for cryptocurrencies. So we got three different Word documents here that are generated. The one I'm going to show you is this one, just a crypto long, and basically what it is I'll just walk you through it. Okay, so what we're looking for is optimal analysis for longing cryptocurrency pairs. So in here we have a variety of groups. The only one that qualifies right now is this fun Ethereum, but we can calculate the mean. There's also, if there's a bunch of them, there'd be a group mean. Maybe you've seen these reports prior. And we also have a group standard mean, which is really the volatility. And here's the specific cryptocurrency pair, the fun Ethereum. So this is the volatility over a certain period of time of the volume, and I'm trying to find out what the threshold should be for volume for generating these pairs. Then we also have want to make sure that historically, let's say over the last 1,000 days, so this will take us back to October, and we want to ensure that we have our data with cross signals. So you can see here we have a buy signal because we have a cross here. So if I was to look at this chart in detail, you can see it historically breaking through on the SMA. This has been fairly tight, as I mentioned before in other videos. And we have a standard trend line, which is below trend. And then we also have our Fibonacci lines, so it's so tight that it just it bunches up. But I fixed that. So statistically, we have our usual set of returns, daily returns. You can see most of them are negative. But here's the new thing. Wanted to let you know I've added now the harmonic pattern. So here we've just generated a bullish bat with fun Ethereum. This is using a one-day chart. So this is what the bullish pattern would look like, bullish bat. And then on top of that, we have here a bunch of candle patterns that are detected as well. And traditionally, the hard part is, because today is the 28th, I've in detail now, if you've seen my previous candle pattern detection, I didn't give a proper date. The time's the same. And again, I'm only using daily data here. So here we have a variety of patterns detected at these times. And I'll show you, if you want to make references to these, all you got to do is just come down to the 30-day bar chart, and you'll be able to make reference to them. But let me get to that point. So we do have the ability now to detect candle patterns. These are really traditionally for market reversal, and this is also for market reversal. So you can see possibly why that we may have a classic market reversal here for this crypto pair. So to me, that would be a classic. Yes, we may have a market reversal, but you need to really dig into each of these candle patterns. But the one I would really pay attention to is the most recent. Again, this is measured over the last 30 days. It's just for testing, but I'm probably going to, again, as I look into more of these, I'm going to try to figure out if it's going to be a week or 2 weeks. I'm going to allow the candle pattern detection instead of a full month. But again, I'm just keeping it for now for 30 days. So again, we add now further further charts I've shown, but I've condensed this all into one chart. So here we have our classic Fibonacci and trend levels. So I've combined them all into one chart for easy access. So you can see here at the end that the price has broken through this lower trend line. Okay, so again, we are always looking at the trends, and usually what they should represent are the maximum or the lower points. So in this case, is the lower points historically over the last 30 days, because that's what the look back measured is 30 days. So it looks like this is correct on this end. And again, what we're looking for is here you can see it's been crossed probably 2 times maybe. And what we're doing here is, now that we have these trend lines, does that mean we can set new price targets? So in our case, we have a uptrend target of 7.402. So let's say if our price breaks through that trend at 7.402, somewhere in between here, we can set that as a potential new support line. And then as hopefully the price goes up, we can then swap out, as the price goes up, new support and resistance lines using the these Fibonacci levels, and then maybe retrace them. But really what we want is, for a classic on a historical level, on a 30-day level, we want our price, so let's say we want our price to break through on the 50% Fibonacci, because on the last 30 days on this retracement, always remember that this retracement is based upon the highest high in this time frame over the last 30 days and the lowest low. And then once we can see that price break through, let's say in the 50 level over the last 30 days, then we can set that as an entry. Historically, that is. But there's a variety of different ways to go about it. But usually 50% of this maximum swing between the low and the high, at 50% is the usual entry point. So historically, that will take us back to this point. Just try to finding that entry point. So again, as far as I know, let me just see here. Okay, so yeah. So this is a 30-day look back, and then we also have the moving averages set out for the last 90 days. Okay, so you can see it's been on average decline. Our EMA, everything's below the EMA of 200, and obviously we're in a bear market, but if we kind of get these big moves, as you can see here, but historically it's just a lot of pressure on the move down. So there's going to be these days here that will move it up for whatever reasons, driving those prices up. So we also have a 90-day look back. We also have a 180-day look back, but you can see how far it's dropped off. And then, as I said earlier, you know, you can go way farther back since the day of inception on this thing. You can see here on October for the buy signals. Historically, I don't know if I'd want to buy this, because we know historically that it'll go up, then it'll go back down as downward pressures put onto the crypto pair. So that is what I wanted to show you. The new additions obviously are moving averages using these candlesticks for 90 days, 180 days, 30 days. Also in this one, we've added the Fibonacci levels with from the lowest low to the highest high over the last 30 days. I've also added these trend lines. Just remember that the intention is of the highest maximum in the last swing and the previous maximum or minimum, and then drawing two trend lines from that, and then trying to gauge when that price moves up to the next level. In this case, we could either set it at this level or at the 50% level. Historically, I'd probably prefer to see it at the 50 level, 0.5 fib level, for a potential entry, just to get it back to, just to know that we are hitting a strike. But again, we also can verify all of this against these patterns here. And one thing I noticed that I am missing here is bullish or bearish, so I'll have to include that on the next go around. Plus, I'm also wanting to throw in if there's a potential of a head and shoulders inverted or just a regular head and shoulders, I'm going to include that. So this report is going to be very useful for a variety of different analysis. So hopefully this will help everybody out, and I'll be able to generate more of these as time permits and get more data. Over and out. Hopefully this will help you out. Talk to you later.